there, Steve Currington with Cross Country Mortgage, and we're going to talk about conventional loans today. So how do they work? Like, what's the difference? Why would I do a conventional loan versus another loan product like an FHA loan or a USDA loan or a VA loan, for example, right? So conventional, typically, if you have a big down payment and a high credit score, that's going to be where you want to go. However, conventional does not require that you have a big down payment and a really high credit score. It's just more critical of less down payment and lower credit scores. So it might be harder to get approved for a conventional loan if you have a lower credit score. So conventional's minimum is a 620 and the minimum down is typically 5%. Now the exceptions to that are if you're a first time home buyer and you can qualify for a 3% down conventional, then that could be an option. But 620 on the minimum for credit score. But if you are a 635 credit score and you're wanting to put 5% down, for example, to do a conventional loan, FHA is probably a better option for you because you have a higher opportunity of getting approved and the interest rate and terms that you're going to get are going to be better. Plus, with conventional, it has what they call private mortgage insurance, and that premium that you pay is actually tied to your credit score. So if you have a lower credit score, you're going to pay a little bit higher rate with conventional, plus the mortgage insurance premium is going to be higher because it is higher risk. So highlights are you can put as little as 3% down, most people 5%, but your typical borrower that's going to do a conventional loan is someone who has a larger down payment and has pretty good credit. Now, we do have a product, we call it Buy by MI, where someone can put 15% down, where it typically is required that you have 20% down to avoid mortgage insurance. If you meet a 740 credit score requirement and a 43% debt ratio requirement, and you put 15% down, we actually waive the mortgage insurance requirement. So if you have somebody that's trying to avoid mortgage insurance and they want to put 20% or more down, they can put less down and still avoid that mortgage insurance. If you have more questions, call me at 918-281-5475. See ya.